Good afternoon, everyone, and welcome to this webinar hosted by the APM on the future of sustainability. Thank you for joining us. It's a really interesting topic, and we hope this next hour will be a great opportunity to not only understand the future of sustainability, but also how it applies to a range of sectors. So first of all, just a bit of housekeeping. You would have noticed a panel on your right-hand side. There's an opportunity to post questions there, so please do throughout the discussion, and we'll try and answer as many of them as we can. Also, you will be muted for the duration of this call, so again, we won't be able to hear you or see you, but again, please do engage with questions. So the aim for today is to look at the role of sustainability, looking forward to the future, especially as we're in a world that's fast changing and sectors that are really facing new challenges every day. So the session really gives an opportunity to explore that, understand it better. So to start off, it's good to understand where you guys come from and which sectors you're a part of. So you'll see a Slido page in front of you now. It'd be great if you could just type in Slido web address and that code there, and tell us which sector you work in. So that should hopefully be coming up on the screen. This would just allow us an opportunity to understand your background and your experience as well. Perfect. I'll wait for all those answers to come through. That's it. A good range. See defence, construction, consultancy, engineering, and many others. Brilliant. Thank you for that. It's good for us to understand which sectors you're working in. So please do continue to enter those. We'll move on to the next question, which is just to understand how you see sustainability as a priority for your business. So just rate this from 1 being a very low to no priority to 5 being a really key item on the agenda. Great. It's great to see that it's a priority for a lot of businesses, and really today's an opportunity to give you a better perspective and a different perspective that you can take back to your day-to-day role. And the next one for us, please. So this is about the conversations you have in your day-to-day roles. Is sustainability a regular topic in your business? Brilliant. Thank you for that. So about somewhere in the middle ground, so not a regular topic for all, but for some. Brilliant. Thank you. And the final one. So are you actively encouraged to adopt sustainable initiatives at work? A good mix there. Great. Thank you very much for that. So that's just to give us a bit of understanding of where you stand with sustainability. Oh, sorry, yes, the final one. So do you see sustainability as a priority for your business? Mostly high. That's really encouraging to see. So thank you for that. Just moving on to introducing some of the guests we've got on the call. We're joined by Mike, which is the Director of Sustainability with Baxterstorey. Mike, just give a brief introduction to yourself, your business and the sector.
Yeah, hi, good afternoon. Thank you very much for inviting me on the call, and it's great to be here. I'm Mike Hanson. I'm Director of Sustainability for Baxterstorey. As Maria said, Baxterstorey is a food service company providing catering in the workplace, as well as some catering within some universities. We're part of a wider family of businesses called WSH, which have some retail hospitality businesses such as Benugo and Searcy's. I'm a caterer by trade, so I used to be an operations manager, moved into sustainability in 2006, now fulfill that role full time. Actively working to hopefully steer the business and the wider hospitality sector towards greater sustainability. And a big focus for us at the moment is around using the Sustainable Development Goals as a framework to map our business and develop targets going forward.
Brilliant, thank you for that, Mike. We're also joined by Em from Consulting as a founder and CEO. It'd be great if you just give us a brief introduction as, again, in the business and sector.
Yeah, well, thank you very much for having me this morning, Marius. My name is Emiko Caerlewy-Smith. I'm founder and CEO of KIT Consulting, which is a financial services management consultancy. We work with organisations in the finance sector to embed ESG, environmental, social and governance factors into their operating models, into the way that they do business. We also act as lead capital markets advisor to the Prince of Wales's Accounting for Sustainability project, where we're trying to engage the whole of the investment value chain around sustainable finance and sustainable investment opportunities.
Brilliant, thank you for that. And I know Giulia's had a few technical issues. Giulia, I don't know if you're able to give us a little introduction on yourself at the business and the sector that you're joining us from today.
Yeah, hi everyone. That was quite good timing. Apologies for all that. Yeah, thanks so much for having me today. I'm Sustainability Manager, part of Mace's Responsible Business team. So I've been working with Mace for about 4 years now, working with clients both on construction projects and in consultancy to drive sustainability, reduce carbon footprints, reduce waste and helping at a strategic level as well. So helping clients across their portfolio, both for new construction projects and their existing assets as well.
Brilliant, thank you for that, Giulia. I guess what we'll do now, we're going to hand over to each of the three guests to talk about a specific topic relevant to their sector. So please do come back with questions off the back of that, and then we'll open up to a Q&A forum for the remainder of the session. So Mike, just a first question for you. So considering the impact COVID has had on your sector over the past 8 months, has the importance of sustainability within your sector changed? And if so, how?
Yeah, it has. I mean, that's a great question. I mean, I think everybody's very acutely aware of the impact that COVID's had on hospitality. I mean, it's in the news. It's one of the biggest hit sectors, probably next to travel and aviation. The impact for food service going forward, particularly for Baxterstorey, as a catering in the workplace, is around the people who are our customers who are no longer in their workplace. So previous to COVID, around 1/3 of all calories taken by customers were on average taken out of home, and as of the end of March, all they moved back home, which had an enormous impact on our business, as you know. But what it's done is it's provided an opportunity, and I think everybody can probably relate to the fact that we've become more in tune with nature. We've become aware of clear skies and quiet roads. Maybe not so much at the moment with this lockdown's not quite like the first, but we could hear the birds. We could there were reports of wild animals in town centres and all that sort of thing, which was amazing. And that has actually also brought us back to nature, brought us back in touch, more emotionally connected, but also with food. and there's been a huge switch between people eating maybe more with their families, planning their menus a bit more, looking at which has resulted in a reduction in food waste. But I think that from a client perspective, in terms of sustainability focus, I think the whole idea of reset and green recovery has really sort of come home. So the demands for sustainability is enormous, and if you look at the sustainability sector as a whole, it's growing massively. If you look at people who are in new roles and new jobs, and there's businesses still recruiting in sustainability, it's recognized that the focus is there because everyone has realized that the need for a green recovery is huge, because we have an opportunity for that reset. So rather than restarting, I don't know, transportation and food procurement and everything else from scratch in the way we used to do it, now's the opportunity to change how we're doing it going forward. And I think that's probably similar across every single sector, but particularly within food service, I think it's become, I would say there's definitely become a more of a feeling of an emotional connect with in the environment, with society, and the way the food brings that together. And certainly what we're doing is we're taking the opportunity to use the SDGs to create that Build Back Better framework, because we can map all of the SDGs, all of our business against the SDGs, that covering everything from modern slavery to procurement, biodiversity, animal welfare. I mean, you name it, it's included within the SDGs. So provides you with an amazing focus from which to generate and drive that green recovery.
Brilliant. Thank you very much for that, Mike. It's really interesting to hear how it's still a key priority moving forward. Thank you for that. Em, a question for you, I guess, also in the post-COVID world, have you seen a change in your clients or how your clients perceive sustainability, and if so, how?
Yeah. So I think across the financial services industry, there has been an absolute explosion in interest on what was already a growing momentum to start to embed sustainability into organisations. So you only need to look at the last week or so, where we had Rishi Sunak and Boris Johnson making announcements about how the UK would be issuing its first green gilt, its first green sovereign bond, for example, and also setting out a path for this sort of green finance initiative that the government is backing. So the creation of green jobs across various parts of the country, and various other sort of green initiatives. I think what's happened with COVID is at a personal level, as Mike said, it's really impacted us. We have started to realise that we are utterly interconnected with nature and our natural environment. And I think this personal realisation has started to play into the way that people across all sectors are running their companies. So we feel more socially responsible just generally in the way that we are leading our organisations. And that sort of company level appetite now for embedding sustainability in the finance sector is building on years of progress that has been started this sort of momentum within the finance sector to do something about the integration of environmental, social and governance factors into the way that they run themselves. So we had the UN Sustainable Development Goals, we've had the Paris Agreement seeking to limit global temperature increases to 2 degrees or aspirationally 1.5 degrees over pre-industrial levels. And those supranational agreements have been driving the global financial services industry to help deploy capital in ways that will achieve those ambitions. The UN Sustainable Development Goals and the Paris Agreement, the way that member states signed up to those things mean that our primary legislation in the UK as a signatory has started to see the evolution of sustainability factors within it, and that has led to regulation. So regulation really was a key driver in the financial services industry for sustainability progress. But what COVID has done, it's given us not only this sort of now personal social responsibility around these issues, but it's really highlighted the key risks to our businesses that our environment can pose. So as Mike has said, you know, to lose a third of your business in terms of people being locked in because of COVID-19 shows that we need to build some more economic resilience to these environmental, social and governance factors as businesses, because if we have another public health disaster play out like this one has, or an environmental disaster, what can that do to the value of our company? And investors are starting to look at this as well. So companies that are seeking investment need to really be showing their sustainability credentials and how they are managing these environmental, social and governance risks in order to attract capital, because investors are now realizing that these are financially material risks to the value of an organization. So that's kind of also driving this need within companies across all sectors to start being more transparent about the work they're doing in the sustainability space and how they're managing these environmental, social and governance risks. I think from a transformation perspective, us as a management consultancy, we are seeing our clients wanting not only to embed sustainability into their strategies, but also to program manage and change manage that transformation in their organization like they would any other transformation program. So we're seeing a need for our program managers and our project managers and our change managers to sit within organizations and really embed that new vision of being a shared value organization for the benefit of wider stakeholders and not just economic shareholders. So yeah, COVID-19 has completely accelerated that growing momentum in the financial services industry, and it's great to see our clients taking it that seriously, that they're really trying to embed this as a lasting change in the way they do things.
Brilliant. Thank you very much for that. I guess following on to Giulia, and looking at the news this morning of, I think yesterday, of £4 billion coming in for a sustainable kind of investment in the future, which arguably is probably not near enough. But looking at as the government kind of really launched an increase in their build strategy, how is construction addressing sustainability, considering historically it accounted for a significant amount of the greenhouse gas emissions in the UK?
Yeah, I think that's a really good question, a really good point to raise. I mean, I think as both the speakers have said, the government's commitment to being net zero carbon by 2050, and obviously as a signatory of the Paris Agreement, has demonstrated that there needs to be action in this space. And certainly as a construction company, all our big frameworks, so any tenders that we're doing with public sector clients, sustainability is a key part of that question. So we need to demonstrate quite robustly how we are tackling sustainability, what we're going to be doing in terms of carbon, how we're going to reduce that during construction. But actually what I was going to say is to reiterate really what the other speakers have said regarding COVID as well. In this year, Mace launched its net zero carbon strategy in January of this year. We were really excited and committing, and we still are committed to achieving net zero carbon by the end of 2020. But as a team, we did have that moment when our construction sites had to shut down for a couple of weeks, what that would mean for the strategy and sustainability ambitions in the industry going forward. Would they need to kind of take a back seat? And that hasn't been the case. If anything, I'd say it's been the opposite. We've never been busier, and clients, like the others have said, are really, really committed to this and really pushing us and asking us, to demonstrate what we're doing in that space. So I think absolutely, and I also really like that comment about the kind of personal commitment, because as you say, I think historically, the latest stats show that globally, the construction industry and built environment is accountable for almost 40% of global emissions. And so, if personally you're looking at how you can reduce your carbon footprint, what can you do, cycle or change your diet, things like that. Actually, what's really exciting for us, and when I'm talking to both clients, but design teams and colleagues as well, and certainly as project managers, is like actually the influence you can have in your job is is many, many more times the influence you might have as an individual. Not to say we shouldn't do those individual steps, but whilst, you know, maybe not taking a flight might save a few tons of carbon, getting a project which will account for, you know, 100 tons of carbon to reduce it by 20%, you know, that's 20 times your personal impact. So I think really interesting to think about that personal engagement and how it's kind of driving activity in that space. I think just sort of, again, going back to, I suppose, your original question and how do we build and tackle that, I think contractors, you know, all of us are realizing that we need to understand what this means. So I'm having lots of conversations around, you know, what accounts for the carbon footprint on our construction projects. Yes, there's transport of materials. Yes, there's diesel and energy we use on site, but actually it's the materials we use. So we need to be clever about what materials we use and how we use them, and reducing that as much as possible, and reducing waste. So waste is still quite a big issue in our industry and really challenging to tackle. So a really big one. And then I think kind of from the other side, you know, the client drive is really important, but again, as project managers, there's things we can do. So it's putting those requirements in the pre-qualification questionnaires, putting them as part of your tender questions and interviews when you're choosing both your design team and your construction team, and then making sure that they're included in the contractual requirements, so that you're sort of really holding people accountable all the way through. But you're selecting the team that has the right attitude in the first place. You know, it's the carrot and the stick. You kind of really need both.
And thank you very much for that. Really useful. I guess there's a few questions we've had through from some people joining us on the call. I think, Mike, just a first one for you from Aaron. So the question's as follows. So Mike suggested the green market is growing. So to what extent, as it appears as though sustainability is rising in the public agenda, is it truly translating to consumer purchase intentions? I guess a question around whether you're seeing customers challenge you on the kind of green market.
I say yes and no, and the reason I say that is because absolutely customers are becoming much more aware of what they eat and how they eat, and there's various factors as to why they're doing that. And there's clearly, if we take meat, for example, and as everyone knows, there's been a huge movement to plant-based dishes, and that is linked to three particular areas, and that's people's health concerns, people's concerns around animal welfare, and people's concerns about environmental impact. And so there's three factors that play into that. So, and different people will see different will see the argument in different ways, and have their value judgment will be based on how they view it. There is also a value action gap. So people may say one thing and actually do another. And I think everybody can see that in all walks of life, and focus on one area and say, yeah, absolutely, we should be doing having a more green economy, etc. But I still want to have a new iPhone every time one comes out, and I think we'll always see that. And there is the requirement for, so sometimes we need to choice edit. So what our customers actually want, but actually what they will buy might be different. But we have an opportunity, without obviously challenging our own business models, is to actually choice edit what we can actually provide for them. So if we go back to the meat question, which I mentioned earlier, the whole driver around plant-based reduced meat consumption is an opportunity just to change the mindset of how people consume meat and why they consume meat, rather than it just be a traditionally and historically meat and two veg, as it were, is actually now change the dynamic and actually say, well, actually it's the veg, the pulses and the cereals come first, and the meat is a side dish, or literally an add-on. And I think that's, so it's still available. We're not actually changing what's available for people, but we are actually just manipulating slightly for the good of everybody. So customers are demanding, customers do want more, but I think we always have to be very, very conscious of that value action gap, is that people will say one thing when it comes to it. It's like healthy eating is the classic example. Certainly in workplace, where you actually, if you ask customer what they want more on the menu, they will say more healthy options. They would like, steamed fish and whatever. And then it comes to Friday and fish and chips are on the menu. Bob on, we'll have fish and chips every time. So there is a real disconnect there, and that's something you have to manage quite carefully.
It's actually quite similar in the financial services industry. Consumers, that intention gap, Mike, that you're talking about, consumers are interestingly asking for these products to be more sustainable, but then when they realize that maybe they're more expensive, then they might change their minds. Interestingly, Nordea Bank had a statistic that says that how you invest your pension can be 27 times more impactful on your carbon footprint, your personal carbon footprint, than taking less flights or eating less meat combined, all of those, energy efficiency activities that we do combined. So actually the deployment of your capital, where you invest your money, and this is picking up on Giulia's point, what you do in your work is going to be so much more impactful than those small individual things that you do as a consumer in your consumer choices. So hopefully that intention gap isn't going to be a huge issue for us in trying to deliver the UN Sustainable Development Goals, for example, because the bigger picture stuff, the way we invest our money, the way we do our jobs, hopefully will have a bigger combined impact on succeeding there.
Definitely. Thank you for that. A really good question. Thank you for posting that, Aaron. I guess, Giulia, a question for you just come through. It's how is the supply chain for sustainable materials working at the moment? Are there growing suppliers in the UK? I guess there's a desire to be more sustainable, but are we seeing that support from our supply chains?
Yeah, I think that's a really good question. And it is one of the biggest shifts I think that's happening. So as I've mentioned, I do a lot of work looking at the embodied carbon of a project, but I'm also well AP, so I work with the well standard and have a personal interest in healthy building materials and try to replicate that on all my projects, whether they're going for full certification as well. So to look at that, it's really about the traceability and understanding where your building materials and your furniture and finishings are coming from, which I think traditionally, whilst people, not everyone, but people are aware of that, certainly when it comes to kind of retail or your food choices. As a building user, you're so far removed from that process. I don't think it's something people have traditionally investigated too much, and it was only maybe the really, really leading edge clients that were thinking about it. So there are. So one of the kind of easiest in quotation marks way to do that is to ask whether a product has an EPD, which is an environmental product declaration. And what that starts to give you is information about everything that has gone into sourcing and manufacturing that product or material. So it will give you information on any chemicals used to treat it, and also the energy and carbon, as an example, used to create it and take you. So that's kind of that known as cradle to gate. So from the cradle, from the earth where you're extracting raw materials, through to the gate of the factory. So EPDs are really helpful if you're trying to understand your carbon footprint, but then they can also help, although it's not, it doesn't mean it will, but it can also help to look at the healthy building side. So what we're finding is, and I think, if you work with green building certifications, such as like the LEED or the BREEAM standard, they start to ask, they're starting to really focus a little bit more on EPDs. And I think, there are hundreds out there, but when you look at the market, there's still a big gap. So for me, it's one of those things where I know that every time I pick up the phone and I ask a manufacturer for these, or we have a tender where these are required and the main contractor will ask for it, then it raises that question. So even if they don't have it, by the time they've had 3, 4, 5 phone calls asking, do you have an APD, they're probably going to ask themselves that question, like, is this something we should invest in? So I think there is a drive, and I think again, going back to the healthy building materials, so companies, all the carpet suppliers, a lot of paint suppliers have got on this in terms of testing their products for emissions called VOCs, volatile organic compounds, which have a really high greenhouse gas potential, but are also quite harmful to us. So they've been doing this for a little while, and you can see that, I mean, certainly from my experience, the companies that have done that testing and have those certificates, it's quite an easy choice, you know, when you're comparing two, and one of them has told you, you know, we're certified carbon neutral, or we're certified zero VOCs, you're going to go with them. So, you know, I think it's improving. There's still a way to go. There's still gaps in information. Just touching briefly on the carbon piece, when we look at MEP elements, so the mechanical and electrical parts of buildings, and the things that we need for those, the information is much more limited. But there are groups working on this, so I think, like everyone said, it's moving in the right direction. But yeah, it would make our life a lot easier if everyone had one. It requires a certain amount of investment, though, so you can understand that it might take a little bit of time.
Thank you for that, Giulia, and thank you for the question as well, Zareen. So just a question for you, talking about, you know, information we have to work with, and I guess following on from that perceived kind of value gap, you work, you know, your business, a lot of the work is focused on data-driven decisions and strategic thinking. So I guess, how has the data-driven approach allowed your clients to be more effective in implementing sustainability initiatives?
Yeah. So from a data perspective, the best example to give you is for our asset owner clients. So these are the investors. It is very difficult in the world of sustainable finance to find comparable and robust data when it comes to the ESG credentials, the environmental, social and governance credentials of your investment. And that's because there is no one common language or methodology or disclosure framework that everybody is currently using. So if I am an investor and I want to make a choice between different companies to invest my money in, how do I compare the sustainability performance of company A with company B when there is no sort of one common methodology for doing that? So that's been an ongoing challenge for our asset owner clients for a number of years. Now, there are a number of things happening within the industry that are hopefully trying to close that gap and make things easier for them. The task force for climate related disclosures, our financial disclosures, is fast becoming, in the finance industry, seen as the standard for climate risk based disclosures in listed companies. And also for pension schemes now, there are requirements that will mean that they will need to start disclosing in line with TCFD as well. So once we start to get this sort of common disclosures methodology, I think our asset owner clients will find it a lot easier to compare and contrast that data and make choices between options. In the meantime, I think the growth of AI and machine learning is going to transform the way that investors are able to look at this plethora of ESG and sustainability data that's out there and make decisions. So we're seeing some really interesting fintech companies spring up now that are making use of AI to help gather data from numerous sources, both qualitative and quantitative data about the sustainability performance of companies, batch all of that together through AI machine learning to be able to report to investors, to report to the asset owners on the sustainability performance of companies in a way that hasn't been able to be done before. So, for example, there's a great fintech startup called Util, who is using AI to scan the world for peer-reviewed journal articles about companies in different sectors from the perspective of their products and their services and any potential scandals or reputational risks that are playing out in the media. And the AI bot goes out and gets all of this qualitative data, and it somehow scores what is happening in the real world with a company's products and services against what is happening in the real world for another company's products and services, and feeds this data back to investors. So taking a data-driven approach to sustainability issues in the finance sector, particularly for investors, is just fundamental, because they're not going to be able to make proper decisions without that data. But what we're finding is that interesting work is happening in the space of, okay, well, how do you start to create these common languages, these common frameworks, and utilize them? But how do you use AI to fish the data from the various sources and feed that to the investors? Yeah, so I think, you know, the old adage is you do what you measure, or, you know, what gets measured gets done. I think as soon as we get more clarity on what is expected in terms of disclosures of companies across all sectors, from an investor sort of a financial disclosure perspective on ESG metrics, the better, because then everybody will be doing things in the same way.
Brilliant. Thank you for that. I guess following on, I guess the backbone of that is there's a real desire for transparency and for I guess for people to wanting to know what the consequences of whichever business they deal with and the actions. So I guess there's a question from Richard, which is obviously kind of bridges a few items we've been discussing, but it's an open question to the three of you. But do you think customers will be bolder at changing their actions as providers continue to provide options? Or do you think legislation needs to be strengthened to accelerate the pace of change? So understanding where the pressure will come from, whether it's the customer base or does that have to be legislation? And who wants to jump in there?
I can make a start, but
yeah.
I'll let Mike go first.
Okay, thank you. I would say there is always a place for regulation. I think the speed of change that's required absolutely requires that legislative framework. Whilst nobody wants to see, you know, nobody wants to be controlled, there's definitely a requirement, I think, for the things to take place. I mean, and I think, for example, you know, if you look at, say, for example, you know, donkey's years ago when there was the introduction of seatbelts, well, if there hadn't been a legal requirement, that wouldn't have happened. And if there wasn't legal changes around advertising of cigarettes, then though all the millions and millions of people that have stopped smoking, that wouldn't have happened. So legislative framework is absolutely essential, particularly given the speed of change, but it needs to be well thought through. It needs to be collaborative. The stakeholders from society, from business, need to be involved in that. I mean, I do think, for example, you know, the legislation or the what's coming out recently, and there's the plastic tax, for example, on single-use plastics. Well, absolutely, that market would not be moving if it wasn't for legislation, because there's absolutely no way, because it's such a complex area of finding opportunities to include 30% recycled plastic in a product. That wouldn't happen because of the price of it, because everything needs to be connected in terms of the waste markets, in segregation and collection of those plastics, to bring them back through to be reprocessed into recycled material. That's quite an expensive process, and without that sort of the stick, if you like, of central government or a legislative framework, there's no way that would happen. So I'm an advocate. I don't want to be in a police state by a long stretch, as nobody does, but I do believe that we need to have stronger legislation.
Yeah, I think really just to build on that, I completely agree. I mean, I think purely, you know, from my personal opinion, I guess is that it's too important. It's too important to just rely on people's enthusiasm, but the reality is that it is people's demanding of action on this that has even brought about the commitment. So things like the 2050 commitment from the UK government and the Paris Agreement. So people have, you know, it has been a social movement, you know, if you like, and I think it's really important to remember that the climate stuff is about people. So it's about social justice, and it's, like they've said, it's all interconnected, and it's not just like the planet on one side and business and people on the other. So I think, you know, both are going to happen, both are going to help, but I completely agree with Mike. It's too critical, and we need a level of change at a pace that it's not going to work if we don't have the full backing and support of legislation. I think, I can't remember where I was reading it, but it was a book on kind of climate change and the psychology of it. And it was really interesting kind of thinking, actually, we've known the facts for a long time, almost like why is it now that things are accelerating? And there was this idea that, you know, people were sort of told that like the way to make a difference was their own personal action. So it was, I remember sort of at school being taught, you know, switch the lights off when you leave the room, and maybe take a shower instead of a bath, and cycle when you can, and all that stuff's great and that's important. But that hasn't stopped us getting, you know, increasing emissions to the point where we are. So it's actually us as individuals and citizens holding our governments accountable too, in terms of where they're investing and what they're doing.
Yeah.
Can
Yeah.
I just quickly? Sorry, sorry, Emiko. Just one thought while I'm still thinking of it. Is I absolutely agree with Giulia. That is that a lot of the will, a lot of sort of the desire comes from society, and then government react to that and create the policy and to drive that change. So if you look at the plastic tax, as I mentioned earlier, that has really come about as a result of 14 minutes or whatever it was on Blue Planet 2, and the drive around single-use plastics and the furore that came around that came out through society, and then government has reacted to it. So government is quite reactive, but actually creates the framework to then put stuff into a legislative framework to drive it, to make sure it happens. Sorry, Emiko.
No, that's fine. No, it's a really valid and good point. And I agree with both of you. I'm all for a pincer movement to get things done right. So you have the consumer kind of demand on the one side, you have the regulatory hammer on the other side, and then you have companies in the middle thinking, okay, well, we need to do something about this because our consumers want it and regulation demands it. I'm also a bit of an optimist, so I would hope that companies are now, for their own sake, starting to recognise the business case for sustainability. This isn't just about responding to consumer pressure and responding to regulation, complying with regulation. You know, sustainable business is just good business sense. It cuts costs, it makes us more efficient, it makes us more lean, it makes us more conscious about waste, etc., etc. So it's a good business model to follow. I think as we go forward, we will see an increase in consumer and public awareness campaigns. So in the finance industry, for example, Richard Curtis launched Make My Money Matter recently in the UK, which is a public awareness campaign designed to motivate all of us to question where our pensions are being invested by our workplace pension schemes. And already in a few months, he's managed to get some of the largest pension schemes in the UK to commit to becoming net zero by 2030. So it just shows that sort of consumer pressure, when it comes from celebrities such as Richard Curtis of Four Weddings of a Funeral fame, really has impacts on what companies are doing and committing to. And these are multi-billion-pound pension schemes. So the way that they deploy capital into environmentally and socially positive outcomes is going to shift the dial on where we get to in terms of delivering UN Sustainable Development Goals and being in line with the Paris Agreement. So I think there's a place for both things. I don't think it will work without the consumer demand. I don't think it will work without the regulation. And the optimist in me is hoping that actually companies are now just seeing that this makes sense to do this in its own right.
Definitely. Thank you for that. And again, brilliant question. Following on from the need for legislation, we've seen recently, and this is for you, Giulia, this question came through from Sam, is how do you see the biodiversity net gain legislation affecting the construction sector? So I know it's in the process of kind of passing through, but it will have a drastic impact. And how do you see that playing out?
I think it's a really interesting question. So as Mace, we've had a kind of a biodiversity net gain target on our projects for some time. This is part of our like wider business project. So I think that's quite nice in the sense that it shows we're on the right track and we have a lot of the systems in place to do so. I think, you know, it comes from an understanding, and going back a little bit to the whole COVID thing, that, you know, urban population, urban spaces are going to grow and continue to do so, but we can't lose our connection to nature. And it's really important to our well-being, to our health, not, again, kind of trying to unpick that whole idea of, okay, biodiversity net gain is about animals and it's not about people. it's really linked. So we're certainly seeing, you know, again, in terms of client requirements, even before this piece of legislation, you know, really asking us to think about and incorporate things like green roofs and green walls to make our urban environments greener spaces. I mean, I live in London. We're quite lucky, one of the greenest cities in the world, but it's not the case, you know, across all that. I think, yeah, the biodiversity, again, it's an interesting piece because my understanding now, I'm not an ecologist, but from my colleagues and the work I've done is that there's still quite a lot of debate about the best way to measure biodiversity net gain and really the metrics you use and actually whether biodiversity net gain on its own is maybe a little limiting. So I was recently talking to one of the scientists at Natural History Museum who's doing some really interesting work in this space and on this concept of natural capital. So one of the things that biodiversity net gain kind of, from what I understand, tends to look at is what's happening above ground. So the numbers of different types of plants that you have, or the number of different birds, or having, you know, bats and vertebrates and things like that. But actually there's a whole lot of amazing stuff that is going on underneath the ground and in the soil, which I think is still being developed and looked at. So I guess like we've been saying, I think the legislation will help drive increased knowledge and research and maybe improved ways of measuring this and making sure that, again, what we're doing has value and we're not doing it just to tick a planning requirement box or similar. And then the last point I wanted to make is I think it's an interesting one because it is really nicely linked to net zero carbon aspirations of projects. And you know, at the moment, if you want to be net zero carbon, that means that you are going to have to do some form of offsetting, because it's impossible to build a building, you know, in true zero carbon. So, you know, offsetting can be quite a controversial topic and people sometimes have very strong opinions around it. But I think certainly as Mace, what we're trying to do is make sure that, you know, we're not just encouraging great big monocultures of trees or of the same sort of forest that doesn't have a biodiversity, you know, value as well. So I think it's, again, looking at co-benefits of this. So, okay, if there's a requirement for biodiversity net gain, what's the best way to do it for the project? You know, ideally always doing it on site. And then actually, can that help us on our carbon journey as well? So how can we do things that benefit the kind of local flora and fauna as well as our carbon targets?
Thank you, Giulia. It's a question, I guess, looking at more the kind of global spectrum. It's a question from Alexander, and it's, you know, it's clear that sustainability is improving in the UK. But how do we influence improvement in other countries that maybe don't have such a focus on it? Again, an open question to the three of you.
So I'm happy to start. From an investment perspective, the plethora of green bonds and sustainability bonds that are starting to be issued by countries, I think, is really encouraging. So not just in the developed world, but in the developing world, we're seeing a number of sovereigns issuing debt, which is designed to channel the proceeds of that bond issuance into sustainability projects within their country. So they would finance things like the building of renewable energy infrastructure, or the creation of green jobs, or the decarbonisation of certain parts of their economy. The US and China actually are leading the way in terms of their green bond issuance, and actually, as I mentioned earlier, the UK hasn't actually issued one in its own right yet. But so I think that things like green bonds and sustainability bonds give countries the opportunity to be able to raise capital in order to become more advanced in their sustainability kind of journey. Without that capital, it's very difficult to achieve anything at all. So the UN Sustainable Development Goals have forecast that they need at least $4 to $5 trillion per year from now until 2030 of investment in order for us as the world to deliver the UN Sustainable Development Goals. Now, where is that for $4 trillion a year going to come from, we need to make sure that we're raising that from the capital markets and channeling it into those countries that can have the most significant impact in terms of our global footprint in order to meet the Paris Agreement and to deliver those UN Sustainable Development Goals. So I think countries, my sort of premise would be those other countries can only advance in their sustainability journey with capital, with investment, and that investment luckily can start to come from some of these instruments that we're seeing in the financial services industry designed specifically to raise that capital for those projects.
Brilliant, thank you very much for that. A good question as well, thank you. Just another question has come through, and looking again at the value action gap and understanding where that comes from. So this is from Aaron. So do you think, I guess one for you, Mike, do you think the value action gap is a result of perceived control? So a desire to control price, for example?
No, I think the main driver for a value action gap, and it is literally, and it from the definition of the word, is that it's about individuals' personal values, and about as I said, for example, you can individuals may say we need to be more sustainable and not have such a capitalist outlook, or not have a throwaway culture, or not wanting to new stuff all the time. But then want a new iPhone every time, and I think that's the driver. It's about personal values, and I think the personal values actually is our whole consumerism in our current society absolutely drives it. It's self-fulfilling, and that needs to change. It's a really hard one to manage, because it's not a very attractive proposition to say, well, actually, we can't do this or we can't do that. So it's actually about going forward, because it's just not an option. So we have to manage that somehow, and that requires clever thinking by corporates, clever thinking by business and government, and to work together to look to a place where we actually understand that the impact of having a new iPhone every 6 months or whatever it is, because you want the latest gadget, or you want a new phone, a new camera on it, or whatever it may be, when we don't actually need it. We don't need to keep changing. So I think maybe it's about one thing that I'm a strong believer in, that there needs to be more information out there of the impact of having that new iPhone every 6 months, and what does that mean globally, and what does that mean, because it's just not an area that's thought of. It's just, or Amazon will deliver you a new whatever, and tomorrow if you're on Prime, and that's it, happy days. And I'm not thinking about the consequences. So I think consequences need to be understood, and the information shared in a very understandable way for society to get a grip with, realizing that their values and what they actually do, and the gap between them, has an enormous impact.
I just wanted to build on that, because I think it's a really interesting question. I agree with everything Mike has said, and particularly the information and transparency piece, because I think some of it might be due to the fact that people just don't quite realize. So I think until very recently, going back to the example of plant-based foods, like, people didn't know that it had an environmental impact. They would have known, about maybe animal welfare, but they would have had different views on that, So I think the awareness is a really big piece. I'm going to just challenge slightly that I also think that some of it, comes from that, there's a responsibility, I think, both from a regulation and a corporate perspective, to make those options available. Because, again, just talking from personal experience, so I'm vegan, I'm a sustainability manager, so I really try. But if I need a new pair of trainers this summer, and it honestly took me days of research, like hours of research, to try to understand which product was best. You know, should I go for, okay, it was vegan, but it was plastic, you know, was it recycled, you know, was it ethically made? And it took a lot of effort, a lot of time. And the product I ended up going for was quite expensive as well. Now I have an enormous amount of privilege that I have both that time and those resources, you know, monetary resources to do that. So I think what part of that gap though is realizing that actually the sustainable options, whether it's food or whether it's, you know, clothing, so looking at like fast fashion, but also technology, the sustainable option is not always available to everyone. So whilst their values might say, I don't want to contribute to fast fashion, maybe, you know, again, not to sort of focus on too many brands, but like H&M or Primark, whoever it might be, like maybe that's the only thing that's available to certain people. So so I think there's two sides to it. One is providing the information so that actually they realize, like Mike says, but then also actually making sure that those products and choices are available to everyone and not just those of us that are more privileged.
Thank you. Yeah. Just come to the time, we've got a very few minutes. Emma, I've just got a question for you that's come through from David. I guess it's looking at a lot about the future, you know, our actions and your work around the climate risk management. So how are you able to forecast the future climate challenges for your businesses?
Yeah. So the work we do in this space is mostly, again, with investors looking to assess the climate risk, the future climate risk of their assets. So the way we do this is through climate modelling, through scenario analysis. What you model will completely change and depend on the industry or the sector or the geography of the company that you are assessing. It also has a lot to do with how long and embedded and diverse their supply chains are. So I'll give you an example of that. So what are the climate risks that would apply to a power station in the northeast of England that's on the coast? Well, sea level change will mean that potentially that asset will eventually be stranded because it will be flooded under certain scenarios. So if the FTSE 100 is on course to create a 3.9 degree temperature increase, which apparently it is, which is quite sad news, then actually our Paris aspirations of 1.5 and 2 degrees are not going to play out. So if we look at this 4-degree world, which the Environment Agency has been talking a lot about, how do we become resilient to that 4-degree world, given that that is looking likely as what's going to happen, that asset from an investment perspective suddenly becomes stranded because the power station is flooded and it's no longer there. It's very different when you're looking at a fashion brand, for example. So you need to look at their supply chain, you need to look at where their raw materials are coming from, what is going to happen to their cotton provider or their provider of other raw materials that go into the making of their textiles. What part of the world is that in? What will the climate scenario analysis show us in terms of what could happen to that part of the world, and therefore the production of cotton, and therefore the entire supply chain that feeds that company? So it's obviously not something we have time for in 2 minutes to kind of go into much detail on, but really the key message is when you're looking at how climate resilient your investments are or your companies are, because ultimately that's what we're looking at, it really depends, how you approach that really depends on what industry you're in, where geographically you have a footprint, the types of assets you have, whether they're real assets, buildings that would be impossible to pick up and move a power station, and how deep your supply chains are. And that makes it very difficult, that supply chain piece, as I'm sure Mike will know, in the food industry and Giulia in the construction industry. Analysing your supply chains for their climate risk is a huge headache and challenge for everybody at the moment.
Brilliant, thank you very much for that. And right on past, just before we finish, just a couple of events we have coming up as a APM in the foreseeable kind of weeks. So if you do want to get stuck in with that, please do have a look at the link at the bottom of that slide and sign up and join where relevant. Just a final note to say thank you to the three of our guests for joining us. It's been a really interesting and informative discussion. And if there are any questions that you've not been able to ask, please do send them across to the APM team and we'll pass them over to Em, Giulia and Mike. Thank you very much for joining us today.
Thanks, everyone.
Thank you all. Cheers then. Bye-bye. Take care. Bye.